Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good morning and good weekend all. Ira Epstein with your morning flash update for this Friday, the 23rd of March, 2018 at 9:25 a.m. Central Daylight Time. So, tit for tat. Yep, we've got it already. China came back last night, and they're putting tariffs on $3 billion worth of exports we send there. That doesn't quite compare to the 50 to 60 billion we're doing. But remember, they don't have a trade deficit with us. We have one of 375 billion or more with them. So that's okay. That's a face-saving gesture, in my opinion. Is it impacting markets? Yes. We know that the agriculture sector is going to be impacted by it. So right across the board, you're seeing that they're down right off the bat. You'd expect that. Another interesting thing happening is that Russia and the Saudis are getting closer to saying, you know, maybe these production cuts should go through 2019. Why not? They've got prices making up what they're missing out on market. Maybe they feel that the market shares they've lost are about as bad as they're going to get. I don't know the thinking. I know that at $65 crude, we're going to produce a lot more oil. It's just going to keep coming on. There's a number that obviously you can't do much more at, but we're not there. And that'll get to be an interesting part with everything. The metal markets, they have finally responded to something. And that something out of left field is that the market now is buying into the idea, just like the yen, that if there's going to be trade wars or the talk of it for weeks and months to come, that is something they can bite into, and away they went. That is a big difference. And, you know, every now and then you get a watershed event. I think this could be that watershed moment. As for the stock market, I'm going to stick back and talk to you as a chartist. This market peaked out in January. Only the NASDAQ came back up and made that one day the higher high. All the other indices look as though they made that peak. The question is, how deep do they drop? The first quarter of the year was expected in many ways to produce the peak. You know, I remember being on Fox and I was talking about the fact that I thought that would be the case. I was on with Liz Clayman, and I said, you know, we're going to get the impact of the tax reform. That's going to be good. We know that the last quarter of the year it was gangbusters in America. That'll be good. But I said, watch out, because as you finish up that quarter, get into it, you go into that doldrum into the summer. I did not know there would be trade wars. That was not there. But I think that's pretty much the scenario. Now, if you look at the bonds and notes, sort of just hanging here, not getting additional bids, but not getting offers either. They're just sort of sitting. When you come over here, here's another event for the day. The White House, President Trump is considering vetoing the omnibus bill due to the lack of dealing with dreamers and lack of funds for the border wall. He should veto it. If he doesn't do it now, the chance of him ever getting his border wall after midterms and so on, he's going to lose seats. He probably won't get it. So if he's going to make his stand and he's an aggressive fighter, I understand what he's doing. He's got to get more people to cave in, and then they'll find ways to make this happen very quickly. But we'll see. I'm betting he would do that. Bloomberg reporting that the Chinese state-backed funds intervened last night because their stock market got hit. No surprise. And if you get my twice daily reports, I wrote that you should expect a big hit last night in world stock markets. The Chinese tariffs, $3 billion on 128 goods. They're considering leaving the levy of 15% additional duty on U.S. Pork imports, as other items as wine, steel, pipe. They didn't mention soybeans. It's coming. The monthly U.S. Number on preliminary durable goods. That's a real solid number. You know, and that's the beauty. The U.S. economy is humming along still. But this is past news. Trade war news is just happening. And let's all understand, while today we start collecting the tariffs on and I'm talking the U.S. collects its tariffs on aluminum and steel, it goes into a holding kitty because a lot of it's going to be returned as the exclusions are given. We'll see how that plays out. But all these numbers look good. Look at the durable goods ex defense, up 2.5%. The prior was down 2.7%. Goods ex transportation up. So everything there is on the positive side. Here's what I was talking about with oil. Russia's Lukoil said he supports the Saudi energy idea of extending cuts into 2019. Remember, these men that do all this, they're part and parcel of President Putin. And what he says is what they're going to say. Stats Canada, CPI number rose 2.2% over year-over-year basis in February. That was stronger than thought. That's a strong number. And grain analysts, I'm just throwing this in because we're going to be looking at grain all over the world now as to who's producing what if China stops buying soybeans. South African corn crop, their corn production at 12.4 million metric tons, up from their 12.22 million. Nothing. Doesn't mean anything. It's a small increase, and you'll see where that goes. The real issues are going to be the volatility, which is back, and I love volatility. And then you're going to have to be looking at the trends that start setting in. How do you keep up with this all, and how's it going to impact all these different markets? Well, that's what we do. We're a commodity firm, and we have our team of writers that write for commodity people. So it's not an occasional letter. I watch all these firms, they'll put out 2 letters a day. We really put out a lot of information. And you pick the categories, you can take them all. That's up to you. But our clients get to choose from all these different categories. Folks, this doesn't even include my twice daily updates that come out. And I'm going to be adding things to even what I do. It's now commodity time. It's fun. If you'd like to see what our customers, and that's how you get this. By the way, our customers get this. We don't charge our customers for that, but you should see what they get. I realize a lot of you pay crazy low commissions. You get what you pay for. To get this info, give us a call. Go to our website. You can click up here, see what we offer. When you click up on this icon, it'll take you to that page where you can sign up for everything. And underneath us, as you'll see, you can also, it'll say click here for Ira's free information. Take a look at what commodity people write for commodity people. Full-time writers, by the way. I think you'll like what you see. I'm Ira. You have a good day.